Welcome back to the What's Your One More podcast as we sit here on Veterans Day, honoring those that currently serve and those who have served our country today. We're kind of going to do our lending update as we jump into the November forecast. And for those that haven't got a chance to check out our episode 8, we did want to say this. We do a deep dive on interest rates and a forecast of what we're going to think is going to happen with my co-host Daniel Halvorsen and Alex Stewart, and they did a fantastic job with that. And then if you don't get a chance to check out 8, do check out episode 9 with Dan Habib, who also brings his forecast into the mix and talks a little bit about the crypto market. Those are 2 wonderful episodes that I can't tell you how great they are, just from the aspect of the feedback we're getting and the amount of traction both those are getting. Get a chance to tune into those, whether it's on YouTube or on any of the major platforms, Apple or Spotify. So, Daniel, my co-host, thanks for joining me today. Daniel Halvorsen, welcome back for the Lending Update, sponsored by Bank of England Mortgage. Glad to have you here today.
Yeah, absolutely. Good to be back.
Yeah, so kind of walk us through November's Lending Update. Obviously, I just kind of preface, we're going to leave out a little bit about the interest rates because we did such a deep dive. But let's go into what we have as far as the meat of this Lending Update. We got a lot of good stuff to unpack here today.
Yeah, I think so. With these lending updates, a lot of this has kind of been sequential, and the updates have built upon one another to kind of reinforce a lot of the points about maybe what we're projecting, what we're seeing. So a lot of what we talked about in October was the demand side of the market in terms of household formations, why we thought based on the demand levels in comparison to the supply levels, why we didn't see a significant drop in prices coming. And, spoiler alert, in the month of October here in our market, prices actually went up, not just the average, but the median price as well. Inventory went down as well.
So, Daniel, let me ask this. How on earth in a market where we have rising interest rates, some will argue rates higher than they've been in over a decade, and we're going to talk about what happened here on Thursday, but higher leading up to Thursday than we were in a decade ago, how is it that we have inventory shrinking and we have prices going up? Those two things shouldn't be happening.
Well, I think that, in my opinion, one of the important things to recognize here is sellers have already absorbed a lot of the affordability issues with rates going from 3 to a little over 7. So they've already absorbed a lot of that. But we also talked about just a little bit of stability in the interest rate market would help a lot with buyers and homes moving. And you've seen that. I think for the first time in a while, interest rates that were quoted, 2, 3, 4 weeks ago for buyers were the interest rates that they got when they went under contract.
Yes.
I also think that we talked a little bit about readjusting expectations. You started to see more realistic pricing from sellers, and that's helped a good bit. And certainly buyers have been able to negotiate a bit here and there, but I think you're starting to see sellers come back to a price point where their home is going to sell. And that doesn't necessarily mean price reductions, but it doesn't mean that they are going to get more for their home than the last comp that sold, whether that be 2, 3, 4, 5, 6 months ago. So I think a lot of it is just stability in the market, and that has in turn led to a lot of buyers realizing that they want to get into the game and they want to buy a home. And a lot of the rapid changes just breeds uncertainty in the market. And I think a lot of it can really be attributed to that.
So a lot of just almost like settling in at this point, just kind of settling in and getting used to the environment.
And those are the exact words. And, we took that from Bloomberg, it wasn't an article that we wrote, but in a lot of ways, that's kind of what's happened. We've gotten some stabilization with rates. We've gotten some realistic sellers with pricing. You're starting to see homes move, and inventory went down in the month of October when we look month over month in comparison with September.
Yeah. So take us away here. Inventory's down. Prices are up. What else can we expect in the month of November?
Well, I think with the forecast that we put together in the lending update, talking about buyers on the fence, it was 2 outcomes. It was a moderate reduction in rates and a moderate increase in price, and then it was a significant reduction in rates and a considerable increase in price. And we talked about why that would be in our interest rate debate as well. We talked about why significant reduction in rates would lead to significantly higher prices. And that's kind of the meat and potatoes here of the lending update in terms of, if you have buyers on the fence, the reality is the thought process of buying a home now, maybe negotiating better terms than you would in the future, and then refinancing that loan if and when rates do come down, kind of being a really good point to reinforce with your customers right now.
So are we talking to a buyer right now that's going, hey, listen, Daniel, I'm looking to buy. You're doing a pre-approval. I'm calling you. We're going through the things, and I'm going, hey, you know what, Daniel? I think rates are going to go down. Or am I the buyer that's saying, hey, listen, I think prices are going to come down? What are we talking to both those buyers right now, or just one in particular one?
Yeah, and I think then there's some that would say that they are expecting both to come down. But I think that the majority of buyers are waiting for prices to come down.
Yeah, I would agree with
that. And they hear all the talk in the news about economy slowing and recession, and they just assume, hey, we're going to start to see prices come down considerably. And really, over the last few months, you saw a lot of the homes that were listed at an unrealistic price come down considerably, and that looked like a significant change in pricing. When in actuality, it was more so expectations of sellers returning to what should be reasonable.
Back to that seller psyche, the mindset coming back to, it's almost like a false narrative, just because you saw that drop on something that was overpriced, give you this assumption that prices are falling or, like you said, coming down.
Well, and I think that something that we've seen a lot recently as well is we've seen some buyers get some contingent offers accepted, contingent on the sale of their home. And some of those deals have been tough to get put together because those buyers want to negotiate with the seller based on where the market is right now, but they also want to sell their home based on what the market was in 2021. So you've got people that want top dollar for their home, but then they want to negotiate on the other side with the seller more aggressively. And some of those, first of all, you didn't even see contingent offers in the last couple of years.
Right
now,
what is that?
Right now, we're seeing more contingent offers, but it was kind of based on unrealistic mindset of the buyer that was buying the new home, which is obviously who our customers would be interacting with primarily. So,
yeah. So I've seen on your social media, you guys do a great job, a fantastic job. By the way, if you haven't, check these guys out over on their social media at Bank of England, Jacksonville. But you did this thing called Consider This, and I really liked what I saw there, which was a consider this graph. Kind of walk us through a little bit the best you can this graph. I know Charlie's going to put it up in the edit here and show what we're talking about, but walk us through that. Hey, listen, prices go up, rates go down, prices, what's the slightly, considerably, options that were on there? I thought that was just a real straight to the point kind of graph.
Just to kind of illustrate based on our thoughts on the market outlook. The first column in the table was buying a home now based on current prices and current rates. And then column 2 was, hey, prices increase moderately. We used 5%, and rates change. Rates go down slightly, so we used 6.5%.
Okay,
just to show what that would mean for the payment in comparison to buying now. We also showed if rates come down considerably, in our opinion, that would mean price appreciation accelerates considerably because interest rates come down. The buyer's demand in the market will come out more aggressively, and prices will in turn go up higher because buyers can afford to pay more. So we showed that scenario as well. And then the last column was we showed, okay, what if you buy now and you refinance? And we illustrated that based on even accounting for the additional costs that somebody might pay when refinancing the loan, just to illustrate the fact that buying the home now and getting the potential upside of the refinance is going to be the best case scenario over what we anticipate to be prices continuing to go up. And while we certainly anticipate interest rates to go down, there's obviously no guarantees of that, but that's also timing, and there's also a variable there of requalifying for a mortgage to refinance if rates do come down. So it's really just illustrating based on market outlook that there's really not a great argument that could be made for waiting outside of uncertainty of how long you're going to live somewhere or uncertainty over some other variables that would impact your decision to buy a home.
Yeah. And, the thing I love about this graph is that the amount of traction it got the minute you guys put it on social media. I noticed that it was one of the most shared items I've seen from you guys in quite some time. So it speaks to the demand that's brewing out there. Maybe some agents are trying to send that to people, and also some of the customers are looking at that as well. So kind of what are some options that buyers can do right now for paying points that, are kind of advantageous for them right now in the market?
Well, I think that in the lending update, we kind of explained at a high level why a lot of buyers are paying points.
Yep.
And some of that is, quite frankly, when interest rates go up, a lot of lenders will continue to advertise lower rates because that's how they get people to call or to apply. So they continue to advertise those lower rates, and then ultimately they pass that along to the consumer by way of charging discount points. And
this is not a bait and switch thing. This is just common. You're trying to get the phone to ring.
Correct. Yeah, it's
you just advertise the lowest possible rate with the highest discounts, just enough to get the phone to ring.
Of course, it's not a unethical thing by any means. It's advertising a rate, and there's a cost associated with it, but the interest rate's what makes the phone ring. So, but we also talked about in terms of paying points, a lot of that right now is really just market conditions. And we already went into this in the episode 8 with the rate update, so we won't spend a lot of time on it, but essentially the interest rates right now in a lot of rate sheets, you can't get an interest rate without paying points, and that's all driven by the lack of appetite for investors to buy mortgage-backed securities because of the overwhelming thought process that interest rates will come down at some point in the future. And this isn't part of the lending update, but this week as we speak, the CPI inflation readings came out lower than expected. And the markets have been waiting for that information for quite some time. And Thursday, you saw essentially the largest recorded drop in interest rates since they started tracking that information. So the markets
well, let me back up. It wasn't the drop in interest rates. It was the actual the bond market, right? Is that what you're referring to?
Correct.
So the bond market, for our audience, had one of the biggest pro swings it could have had in the history of that bond market for the positive.
Correct.
And that's really important because that does impact interest rates. Not every lender changes accordingly, but you had to acknowledge that it was a good move for the real estate mortgage world we haven't seen before.
Sure, of course. Yep. And like I said, that's all on the heels of inflation.
Right.
And better than expected inflation data. And part of the market outlook with what we thought with interest rates was predicated on exactly what happened actually happening. And that was replacing some of these higher readings in October, November, December with lower readings based on where we're at right now. So, and not to say that we're now on a downward trajectory for the foreseeable future with rates, but December's reading comes out favorable again. Maybe the same happens in January, and you could start to see where some of these rate forecasts, not just ours, but some really smart folks like Dan Habib, you could start to see where some of these thoughts may be coming from.
Yeah, and I'm really glad you took a little bit of a victory lap here because well deserved. Our rate discussion, that was one of the things you talked about, and you absolutely kind of pinpointed the inflationary peak and what it may look like if those readings come in lower, and that extensive amount of overlay that's put on the 10-year Treasury and that windfall that could happen. So good for you on that. It's great to hear you talk a little bit about that. I know you don't always bring that up, but that was a good call.
Yeah, and if you're a visual person, the lending update, we talk very in depth about why we expect rates to drop. So no need to repeat that in detail. But the buyers paying points section was really primarily to illustrate that as a buyer right now, if you feel like you've got an opportunity to negotiate, the big win for you would be to try to negotiate the opportunity to get the seller to pay discount points to buy the interest rate down. And I think there's still a lot of mindset right now amongst buyers. If they have an opportunity to negotiate, everybody goes back to price. If I can negotiate the price down, that's a win for me. And I would argue that most buyers don't shop based on home price. They shop based on what their monthly mortgage payment's going to be. So the takeaway is really, as a good originator right now, are you educating buyers, hey, listen, if the home is listed for $400 and you think you can get it for $390, instead of thinking about how much lower you can get the price, let's consider how much of a concession that you can get that can be applied towards lowering the interest rate. And really, a lot of mortgage lenders out there right now are advertising, hey, buy now, refinance later. And which is great for the mortgage lender. And it's also great for the consumer if rates come down. But what if you could negotiate the lower interest rate now from the seller to the point where you don't have to refinance and incur those costs? So
absolutely,
our goal is, if a refinance makes sense, obviously we're gonna help that customer to take advantage. But our goal is, if we can avoid the need for 2 transactions and we can get it right the first time, then we're going to educate you on how we can do that.
To me, that sounds like the difference between an advisor and an originator. We talk a little bit about this all the time, though, but I love how you guys focus on advising versus just trying to originate the transaction. And I think the lending update's a great example of that.
Well, and good people deserve good advice.
Yeah.
And that's kind of how we've always viewed it. And that's how we want to operate, how we educate our customers rather.
And this is such a marginal business that really there's just not that much difference between lender A, B, C, D. It keeps going on. There's really not. It really does come down to the person that you're working with. And, it doesn't matter what lender you work with. Let's get that straight right now. But are you working with someone that's truly advising you and looking out for your best interest, or are you working with someone that just wants to get the transaction done? And when I hear buy now, refinance later, I'm hearing someone that's trying to create additional book of business down the road versus maybe giving you the options to avoid those additional costs down the road. And it's not one of my favorite things I hear out there.
Yeah. And at the end of the day, like I mentioned, the goal is how do we help the buyer obtain as much benefit as possible? Mm-hmm. And in 2020 and 21, that wasn't really a concern from a rate standpoint. It was more of a concern of how can we help this customer at all costs get their offer accepted in a challenging market. And now it's maybe we can negotiate. Maybe the payments aren't quite where you want them to be based on our interest rate. So how can we help you to negotiate with the sellers to increase the affordability and make you feel more comfortable so that you're not in a position where you're hoping and praying that rates come down to comfortably afford the home.
Yeah, this is something that we're going to do every now and then, but I'm going to bring it up. We had a question come in live here on something that we were looking at from a real estate agent. Say, hey, listen, oftentimes I can't get the buyer's agent to understand what I'm saying. How do I advertise this in the MLS? How do I advertise these things you're discussing right now to where I can attract more buyers? How can I create a larger pool of buyers with this information? It also came over on our social feeds as well over the weekend. How do we, what kind of advice do we offer to a listing agent that's trying to put this information out there? What's the best way for them to do that?
Well, and ultimately they need to run any of this by their broker. But
correct.
In my experience, you could advertise in the private remarks that if the buyer were to use a particular lender, that they would provide an incentive towards closing cost or points or a temporary 2-1 rate buy down. So there are ways you can advertise that in the private remarks so that the agent is aware of an incentive and they can call that lender for more information.
Maybe even have the lender illustrate through their own programs where they can actually show, with the proper assumptions in there, this is what the rate would be with this score, with this LTV, blah, blah, blah. Rate here, payment here, 2-1 buy down, rate here, payment here. Like actually have them illustrate it for you in the MLS because there's a financing tab that'll do that for you.
And that's a great point as well. If you're on the listing side, and we've actually fielded some calls recently from listing agents and even talked to a few sellers, which I can say in 12 years, I've never had a conversation with the seller about how to market their home, but we have had some agents that have deferred to us to speak with their clients about some of these options with paying points and 2-1 buy downs. And you certainly can provide information and illustrations so that when a buyer comes to a property, there's an education point for the buyer and the buyer's agent of, hey, here's how we can help maximize affordability and reduce your buyer's payment as much as possible without any significant reductions in the price.
Yeah, no, that's a great thing. Daniel, I can't thank you enough for being on here and kind of going through all this stuff with us here. For our audience, if you're working with a lender that's doing these things, it's fantastic. They should be doing these things. But if you're looking for a lender that can offer some, advisoryship and then also do some of the products that we're describing, more or less illustrate them for you in the MLS, Daniel, what's the best way for them to get in touch with the team over at Bank of England?
They can reach us on our website at boejax.com, or they can give us a call at 904-992-1000.
Yeah, we'd love to see you guys kind of benefit from what you're doing here on the show. Thanks for coming out and doing this. Also, guys, if you like what you're hearing, continue please to follow us on our YouTube channel by going to our website at whatisyourOneMore.com. Click on that subscribe button. Leave a comment. We'd love to hear from you. More audience participation and feedback like we had today is fantastic. Follow us on Apple Podcasts or on Spotify, and also at What's Your One More on all of our social handles. Thank you, guys. Appreciate it. And Dan, thanks again for being here.
Yeah, thanks for having me.
All right.
I got one more shot, I'm gonna make it. One more chance, I'm gonna take it. I meant it when I said it, now it's time for me to do it. I got one life to live, so I put them all into it, yeah.